Taking Stock with Pimm Fox and Carol Massar. On demand via our Bloomberg Radio Plus app. Free for iPhone and Android devices.
Well, the California girls are really the best. And I never walk.
Yes. The Ramones talking about California in San Diego on the Ring Central phone line. Right now, we've got Steve Leonard. Steve Leonard joins us. He is he's got $280 million under management for Pacifica Capital Investments. He's the founder, the chief investment officer. Steve Leonard, great to have you with us here on Bloomberg.
Thank you for having me.
All right, so I want to combine a little bit of, one left side and right side of brain thinking here. Make the case for value investing at a time when we hear so much about buying growth stocks, because if you have a sluggish economy, growth is going to be at a premium.
A good question. We think growth is one of the factors that make up value. So when we value a company, we try our best to analyze its growth prospects, and if the growth prospects are stronger, then the value is higher than it would otherwise be.
So it's a component of your analysis.
Yes, better word. And we don't think that our reasoning doesn't change during different market periods. Growth is always a component of value, and we always try and buy value.
I've been looking at some of the past examples, such as Starbucks or even Best Buy. At one point, they were considered growth stocks, correct?
When we first invested in Starbucks in 1998, they were a growth company. They were maybe an extreme growth company. They still are somewhat of a growth company, even though they obviously can't grow as fast from where they are today, as compared to where they were in 1998. Conversely, Best Buy is not likely to have much growth currently, even though when they first started, they had lots of growth. And again, though both companies' stock has value, and if you can buy it for less than its fair value, then you have a chance to make money.
Steve Leonard, can I ask you to take a step back, take the 10,000 feet view, or foot view, if I should say, of kind of what's going on in the markets right now and the pullback that we're seeing. What's your interpretation of what's going on?
Well, again, we're not short-term traders, so a minor pullback here is not of significance to us necessarily. We look at longer-term picture, and we always look at value. And right now, we don't see a whole lot of value in the market, so we've been on the sidelines for quite some time, and we're going to remain on the sidelines until we get the prices for the businesses that we understand and want to own. We get them at the prices we want to buy them at. So
safe to say that you don't mind, to some extent, that we're seeing this pullback because stuff has gotten so overpriced, overvalued in your view?
Yes, we manage many separate accounts for our clients, and those accounts that are not subject to income taxes have quite a bit of cash in them today. And so, yes, we are hopeful, or we expect and are somewhat hopeful that there'll be better values for us in the future.
How long are you willing to wait?
Well, I mean, in a sense, forever. We won't buy unless we think the values are safe and provide an adequate return.
Okay. Having said that, you do own the shares of Wells Fargo, for example, or is that one of the stocks you're waiting to buy?
Well, we did buy that in 08, 09, and that was a fabulous opportunity for us, not only for Wells Fargo, but for many companies. That doesn't come to you very often, but when it does come, you need to be very aggressive. And we bought Wells Fargo, and we've held most of it ever since. Now, in the IRA accounts, again, we've sold quite a bit as the price has risen fairly dramatically over the last couple of years or so.
Our guest on Taking Stock, Steve Leonard, founder, chief investment officer at Pacifica Capital Investments, $280 million in assets under management. Steve joins us on the Ring Central phone line from Culver City, California. So, Steve, you say you have a lot of cash on the sidelines right now. The pullback that we've seen this week, have you done any kind of buying, or again, are you still waiting for those values to come down even more?
There's one company that we think is close to our initial buy target price range, but otherwise we're still quite a ways off, and so we expect some point in the future that we will be able to buy more companies that we really want to own at very much more attractive prices.
Hey, Steve Leonard, I'm wondering if you could just give a kind of a shortened bio, because I've been looking into your background. You have expertise in commercial real estate. You've seen the cycle not only in California, but you've done extensive work in Colorado. You've bought and sold businesses. I'm wondering if you could just give us a little bit of your own background.
Sure. My initial background was commercial real estate when I got out of college. We did take advantage of commercial real estate as a cyclical commodity type investment. We invested for our private clients, similar like we do with the common equities. We took advantage of a strong market in the 1980s in Southern California, but we got out when it got overheated. We saw a giant opportunity in Denver in the late 80s, early 1990s. My wife and I moved to Denver, and we continued to be local to do it right. And we amassed over the next several years the largest portfolio of commercial properties in Denver. Then later on in the decade, when the funding got strong again, the market recovered. Wall Street was very aggressive in capitalizing new public REITs. They wanted portfolios such that we had, and we sold out.
All right, so now you kind of bring us up to date. If there is one asset class out there that is unloved and is of value, what would it be?
Well, it's not biotech or cloud computing and technology, that's for sure. Again, there's really...
How about a coal company?
A coal company. We're looking at staples.
Okay.
We think the office supply sector has been beaten up very hard, and for good reason. But there is a massive consolidation taking place, giving up stores, downsizing stores, and at some point the margins will return, and so we think Staples is the best operator. And if we can buy that at the right price, we're interested.
Well, the stock is down 26% so far this year. You can pick up Staples stock for $11.76, and it still sports a gross yield of 4%.
So it's very close to where we want to be.
Okay.
What about retail space? Retail as a group overall in the S&P 500 down about 9% so far this year. We all know the stories of various retailers that are getting beat up, whether it's a JCPenney, whether it's a Sears Holdings. There's a lot of names kind of going through a tough time. You are looking at that space.
Yeah, so we don't buy sectors. We buy individual companies.
Right.
And so we try our best to stick to those that we have confidence in their future. We can, value them, and then we can sit and wait for the right buying opportunity.
So Best Buy is one of the retailers that you like. Are there others that you're looking at, though, in the space?
Yeah, well, we like Best Buy mainly because we didn't think it was going to go away like the market did a year ago or so, and the price was extremely attractive.
Hey, Steve Leonard, what's the dumbest idea someone's tried to get you to be interested in the last quarter, since the beginning of the year? Someone try to get you into cloud computing? I'm not saying those are bad ideas. I'm just wondering from your perspective.
Well, we find that when the market's been strong for a length of time here, we tend to get client calls that kind of ask us, why aren't we being more active? And so in a broad sense, just being more active when the market is fully valued, and then some, when, bearishness is at extreme lows and capital flows are very aggressive, that's into us as a time to be very careful.
What do you think about a 30-year Treasury at 3.5%?
That's too tough a call for us to make. There's certainly many people think inflation is going to return any moment now, and there's another group that we really respect that thinks just the opposite, that the United States and Europe are in for a long period of very low inflation to possibly deflation and long-term lower long-term interest rates. We don't make those kind of bets, though. That's too much prediction.
If you were looking for an asset that you felt held its value, what would it be?
The best-run companies that earn strong returns on equity, that have reasonable growth prospects and honest management.
You must follow a lot what Warren Buffett does.
Well, it's smart to follow the ones who do the best, isn't it?
What do you think about buying Berkshire Hathaway stock?
I'd love to. We own it. It's our second largest holding, and we would buy more if the price was more attractive.
Do you go to the Warren Buffett annual meeting every year?
No, I haven't, but I should.
All right. Well done. Want to thank you very much for being with us, Steve Leonard. He is the founder and the chief investment officer of Pacifica Capital Investments, joining us on the Ring Central phone line from San Diego, where he helps manage nearly $300 million.
Taking Stock, weekdays at 2 p.m. Eastern. In New York on Bloomberg 1130. In Boston on 1200 AM and 94.5 FM HD2. Or on Sirius XM Satellite Radio Channel 119. Copyright 2014, Bloomberg LP.